What is going on, everybody? How is everybody today? Jumping on our third live stream after our Finance Friday video just dropped as of 30 seconds ago. Welcome to our live stream. This live stream basically is just to preemptively follow up from our video on the mortgage process. So we had created a video today. Go check it out on YouTube. It is basically outlines the mortgage process and what it takes in each individual step. We found it was going to be super helpful just kind of to give a little bit of clarity as to what people should expect when moving forward with the financing applications.
Mm-hmm. Yeah, we know the biggest, one of the things that you guys take into consideration is how smooth the process is and how much you enjoy the experience working with your mortgage agent. So one of the things that we tried to do with this video today was get you guys, give you a little insight as to what we look for when we do our application and how we would like things to go, all the way from the initial consultation to the FINMO application to the underwriting and secondary consultation, going over what your options are, the approval process, how long you guys should expect to wait. We know that the approval process changes based off of the time and season and the time of the month. There are some busier times, and that can slow down, times to approval and how long some of these things take. And that's kind of something that we're seeing right now, just with the time of year and time of month. We can get into that.
Yeah, so actually one of the things we just want to touch on was, I guess, market sentiment to start off. We're going to start a little bit on just touching where the market is currently and what's happening, because there's a lot of unknowns currently. So as of this week, the Bank of Canada came out and released a statement stating that they are not going to increase rates until 2023, which basically means we're going to be in a low interest rate environment for the foreseeable future, which is a good thing for investors. I mean, we don't see rates going up anytime soon. We think it's obviously going to be beneficial when it comes to purchasing property in the market as well. In regards to people purchasing property right now, for lenders, wait times are still a little bit long. We're seeing that a lot of the wait times are roughly 48 hours just to get back to us. So if you're have a file with us currently, we're not being slow. We're honestly it's taking some time for the lenders to get back to us. They're pretty inundated with files at the moment. CMHC. So CMHC currently on the commercial side is taking a little bit of time to get back. So if anybody has gone through the process initially with CMHC, it does take a little bit of time. Usually it was around 3 months process from start to finish, from like application to funding. That is a little bit more delayed now. We're currently at around 6 months, I would say, to be able to go through your CMHC commercial financing. So keep that in mind if that's something you guys are looking at. I know we've talked to a few multifamily investors recently, and they're kind of just juggling between being able to make an offer and be competitive in the market versus putting a minimum down payment required, which is an interesting conundrum to be in.
Yeah, I mean, there's some great aspects to CMHC financing. Obviously, the loan to value, being able to go 85% on a commercial unit is a definite benefit, and remove some of the barriers for a lot of people to be able to get into a commercial property. The other thing is the rates. Most of the CMHC rates on the commercial side are somewhere sub 2s, 1.9, 1.8, and that's obviously super attractive as well too. And a reason for people to want to go to CMHC. But again, that 6 month wait time. A lot of the deals that we've seen come across our desk, are closing in roughly a month and a half to 2 months. And then you got to take a look at, what you're able to do in terms of a financing condition date. The last thing you should really do is go into a commercial property without some sort of conditions, because there's so many things that can come into play down the road. And, most of the building condition reports, environmentals and appraisals take 2 to 2.5 weeks sometimes. So that's something to consider. But yeah, CMHC, great option in terms of financing on the commercial stuff. But the wait time right now, pretty high, 6 months. So that could come into play.
Yes. Something just to note, guys, for all the people who are tuned into our Facebook and Instagram and YouTube, feel free to drop us any questions you guys might have if you guys are dealing with any situations with your real estate investments at the moment. This is your time to be able to ask us questions and for us to be able to answer you in real time. So if you do have any questions, feel free to drop a question, and we'd be happy to get back to you guys throughout the live stream. Oh, we got one right here. It says, "Go and get a great deal. Everything else is easy." Love it. We try our best to be able to help everybody.
If only it was that simple.
Yeah. I guess we're going to start with the actual just mortgage process. We wanted to go through it with you guys in our own words, just to be able to kind of humanize it a little bit, kind of preemptively talk about what our video actually was posted about today.
Yeah, guys. So, I mean, the first thing that we usually start with when we're working with an investor is just our initial phone conversation. That's really just to get introduced, let you guys know who we are, get a sense of who you guys are, what your goals are, kind of what got you into the real estate investing industry. It's important for us to kind of understand what your goals are and what your previous experiences are with investing, because it changes how we kind of approach the situation. If it's someone who, has 5 to 10 years of investing experience, we don't have to maybe explain as much of the processes, or they're going to be able to grasp things a little bit quicker. And we can kind of speed up the conversation. Whereas if it's someone's first time investing, there's going to be a lot more questions. We have to make sure that we explain the entire process in a way that someone can understand it for the first time. And if we go into a little more detail for some of the steps, so we can kind of attune our conversation based on the experience, and just, what we can expect moving forwards. After that first initial conversation, one of us is going to either send you out a mortgage application link to our Finmo profile builder that we use. And it's going to be ourselves, or we've actually brought on a lovely underwriter, Lisa, that we are beginning to use a lot more of now. So if you guys are receiving emails or contacts from somebody, Lisa, that's who it is. But someone will send you guys a Finmo link. It's super easy to use. I think the majority of people who have used it have some great feedback on it. One of the favorite things for us is that it has an online profile where you guys can upload all your documents into, and it keeps everything in one spot versus having, to chase down emails and trying to find documents that maybe sent, maybe did not send, who knows. And it lets you guys know, if we're asking for documents, you can say, "Hey guys, I already sent this to you, pay attention," and we'll go back and take a look. One thing that we did want to touch with on the Finmo application is we can see whether or not the application has been fully completed, and whether or not the documents have been uploaded into the portal. We prefer that you guys upload your financial documents at the very least, at least your past 2 years documents. This is just simply because the way that the banks and the lenders underwrite finances requires us to take a look at the past 2 years. And, it's really a waste of your time if we're giving you numbers that aren't accurate and aren't based off of anything quantitative for us to take a look at. So if we give you guys some pre-approval numbers and then you upload your financial documents and everything's different, like that, those pre-approval numbers no longer do any good. And maybe you've been looking at houses either way outside your price range or way below what your ceiling is. So, it's really for your guys' benefit to have those documents uploaded up front in that initial application. And it helps us because we do all of our underwriting ahead of time to make sure that there isn't going to be any issues further down the line of the process.
That was something that was really important to us, was being a little bit different than what most mortgage brokers or brokerages do. So, sometimes you'll call your broker and you'll be like, "Hey guys, I need some sort of pre-approval. Can you help me out?" And then they'll be like, "You're around ish there." And you're like, "Okay, well, that doesn't help the situation. You go find a house and you can't qualify for the home." Whereas, we're kind of backwards. All the actions that we make is specifically based off of the data that we have. So if you give us the information, we can do our job and effectively give you an accurate representation of how much you can buy, which at the end of the day is the most important thing going into it with some sort of conviction. That way, you can either go in without financing or with financing, obviously depending on your risk tolerance, but at least you understand that your financing is secured on the back end of your numbers, which is super important. We actually just had a question real quick while we cut down this process. One of the questions were, what is the best way to avoid fees when breaking your mortgage? That is a great question. So I think it all comes back to initially when you get your mortgage. You have to understand what is your strategy. So most people, to get the cheapest rate, go for a 5-year fixed term or 5-year term. The majority of people who get their mortgages, and it's a 5-year term. That 5-year term locks you in. If you're on a fixed rate, locks you in, and usually the prepayment privilege to break your mortgage is 3 months interest or the interest rate differential, whichever is greater. At that meaning, basically, if you break your mortgage, I'd say for like half, a little more than half of your term, you're going to be paying a ton of money to break your mortgage, depending on obviously how they calculate their interest rate differential. So if you were planning to break your mortgage, which the average person does every about 3.5 years, I would recommend sitting down with your mortgage broker when you first start the application and understanding what term is going to work best for you. It might, if you take a look at it, if you pick the term that's right for you, even a 3-year term, it's a little bit of a higher rate. It's going to be less. You're going to pay less over those 3 years than you would paying the $15,000 to break your mortgage early and then try to access some of that equity. So that's number one. Number two, variable interest rates. So if you're on a variable interest rate, it is only going to cost you 3 months interest to break your mortgage. So you have a little bit more flexibility when it comes to breaking your mortgage earlier in your term. So it's something to also take into consideration when you're trying to get when you're initially trying to get your mortgage. It's all about, I guess, being proactive in a sense when you're trying to plan out your mortgage financing.
Yeah, and this goes back to the mortgage process, and it's actually a really great question, and really fitting to the topic is in that initial conversation. That's why we go over that whole, what are your goals and what are your expectations? If you're looking to do a BRRRR strategy and you're going to have this renovations completed within 6 months to a year, it doesn't make sense for you to go with a term longer than a year because you're most likely going to be facing a higher exit penalty. So we can structure that term based off of what you guys foresee your goals to be. If it's a little bit of a longer of a process and maybe you're looking at adding a unit or doing like a duplex conversion, and maybe you're coming into some sort of busy season and it's going to take you longer, maybe we have to take a look at a 2-year term just to ensure that you keep that rate, but you're also not too long of a term that when you go to break it, you're going to be looking at an interest rate differential. So that's, an important thing to bring up and something that we'll ask you guys. And I think we always do ask is kind of what your goals are. And again, going back to that initial consult, that's kind of why there's so much importance placed on there is that, getting that information from you guys and what your goals are allows us to tailor your mortgage application specifically to your situation.
Thank you for asking the question. We really appreciate it. As many, all the questions on here and all the feedback that we get is always appreciated. We're trying to build a natural ecosystem where you guys can come and approach us and ask us any questions. We're trying to make it as open as possible for all the real estate investors to be able to have accurate and effective mortgage knowledge so you guys can make decisions moving forward. Super important.
And moving on with the process, after you guys fill out your FIMO application, we get everything underwritten, we're going to book another call with you guys just to go over where the numbers are, what your options are moving forward and what kind of scenarios are available to you guys. After that, we're basically moving forward. If you guys either don't have a property under contract or property that you're interested in, we're essentially just going to wait for you guys to have something, and then you can bring us either the MLS listing or the purchase and sale, and we can move forward accordingly. Once you guys have a purchase and sale and you're looking to move forward with the actual approval, approval times are a little slow right now. Banks are super busy. That time of the year where a lot of construction homes are starting to get finished and completed, banks are dealing with those. And then also, just kind of starting to wrap up the season. It's been hot. The real estate market is still super busy. So, where we're usually seeing approval times to take 3 to 5 days, we're probably somewhere a lot closer to 5 to 7 days right now to get an approval back. And that's, that's as long as no questions are being asked on behalf of the underwriters, and we have to do some further investigating some things. So just keep that in mind right now. If you guys are looking for approvals, probably looking 5 to 7 days. And again, that's just where we are in the market and how banks are moving forward.
Yeah, we have another question from YouTube. Aberrant Art. Hey guys, question. My wife is trying to get her savings from a Brazil bank account to her Canadian bank account. Any suggestions on how to do this? Most places don't work with Brazil currency. That is a tough one. So mostly it's going to depend on the home bank that you have. I would try to, RBC is really good with working with international clients. I would try to go and speak to somebody at RBC and then let them know your situation. And then from there, I guess they would be able to advise you as to how to transfer funds internationally. There are obviously a few money transfer services available to you. I know some of them come with decently high fees, but there are a handful of ways to get currency or transfer currency into another currency and home. There's conventional ways, there's cryptocurrency ways, there's many different ways to be able to transfer money across borders. I highly recommend, if you don't understand the digital aspect of doing it yourself, then I would say speak to a bank representative who works with international transfers.
Mm-hmm. And all these questions seem to time really well. Again, if this is something that you're expecting a gift from family members or some sort of inheritance or something like that, make sure that that's something that you guys bring up in that initial conversation as well too, because we're then going to have to take into account the amount of time it's going to take for those funds to be transferred over and whatnot, right? So again, just being open up front in that initial conversation, and just letting us know what kind of things we might have to expect throughout the process. I think this also kind of ties into something that we talked about on Mark's podcast the other day as well too, with with how rates are, and we understand the type of industry that the mortgage industry is, and a lot of people place a lot of focus on the interest rates that they're going to be getting. We can talk about whether interest rates are the most important factor or not, but if you guys are working with other brokers, I mean, obviously that's something to expect, and we understand, and we have no problems helping people. But again, just be upfront with us and let us know that you guys are working with other brokers. We did talk a little bit of how our relationships work with the lenders and how it can be, it kind of inhibits our ability later on down the line to be able to consistently create these unique deals if we create them for a borrower or investor, and they kind of take that back to their bank and get it done there. If we keep going to our lenders and trying to structure these deals and they fall through, it affects our ability to get these deals done for other people and other investors. So just be honest with us and let us know up front if you guys are working with other people, and we'll have a discussion how to move forward. But for sure, just clearing the air beforehand, for sure.
For sure. We're on the same team, guys. Make sure that we're on the same team. Don't try to hide anything from us, and we'll try to do our best to find a solution for you guys. That being said, Pira just had a question on YouTube, said, have you had any issues financing student rentals? We've touched on this a little bit in a few of our videos. Student rentals can be notoriously difficult to finance. Specifically, most financial institutions are really turned off by student rentals. They don't like it. They don't like the inconsistency in the income. They don't like the risk associated with it. And even if you're purchasing a property around the vicinity of a university or college, they might have issues. They have red zones, so they call them, which are high risk locations that would cause them to, I guess, look a little bit deeper into if it's a student rental or not. Student rentals can be decently difficult to finance.
Mm-hmm. Yeah, even if it's not a student rental specifically, sometimes properties within very close proximities to a university or a school, still a college, you can get a little bit of pushback from the banks from that aspect as well too. Like Josh said, it just comes down to one, potential damages to the property. I mean, we all know what students are like and what some students are like, not to mix everybody in, but and that the student rentals can be pretty inconsistent with what the terms. Sometimes students may leave after a semester or midway through it, and that just could create inconsistencies with the rental income. And for rental applications, a lot of them rely on the rental income to work. So that's kind of where the banks raise their flags and why they have issues moving forward with deals such as those.
Yeah. We can kind of touch on student rentals are almost the same as, Airbnb rentals. It is decently difficult to be able to get financing for them. If you watch Matt's channel, you can go to Matt's channel, and he has a handful of different videos that break down how to structure Airbnb and student rentals in a way in which possibly would work for financing. again, most lenders are not huge fans of financing student residences. They're seen as short-term rentals, which can be decently difficult to finance.
I think banks, I would like banks to be able to use, more of the Airbnb income and kind of touching on those touchy rental subjects. We understand Airbnb is a great source of income for a lot of people, and it can be a really strong method to bring in passive income. And there's a lot of people who do it very, very well and very successfully, make a lot of money per month. Unfortunately, the banks are a little bit behind on kind of, keeping up with the modern strategies that investors use. And again, like moving from the student rentals into the Airbnb, it can be another tough way to be able to claim the income and use it on applications. The closest I think I've talked to a bank and have heard from feedback from our BDMs is that there may be a bank out there that would consider 6-month leases. But other than that, I mean, that's a bit of a long shot, and I haven't seen anybody accept that yet. But we talk to our lenders on a daily basis, and we push them to be able to accept Airbnb income, and we're hoping that one day they'll start to kind of come around and be able to find a way to utilize that a little bit more, because again, that's obviously a great way to be able to help strengthen an application and possibly get into another property for a lot of investors.
Perfect. We have another question. I haven't selected a broker yet, but also far I've had 2 different pieces of info regarding income. TD told me they would look at the last 2 years. A private broker says they will look at ... something. So touching on income, this is something that's important for all the qualification processes, ties into our topic pretty well, actually, is that for different types of income, we have different qualifications. So for a salary employee, we look at a letter of employment, the pay stub. And recently, due to COVID, most lenders are now requiring a bank statement showing that you have been paid up to 30 days prior to closing. It's just to verify that you are currently still working with the current employer that you had stated on your letter of employment. Now, for a hourly employee, they will look at 2 years T1 generals and notice of assessments. And they will use an average of the last 2 years for your qualification, as long as it's inclining. So if you made more money in 2019 than you did in 2018, I can find the average of those 2, and that's going to be your qualification number. Mm-hmm. Now, if you made less, I have to use the lesser of the 2, which would be 2018. Now, if you are an hourly employee and you've worked less than 2 years in your profession, if you have a letter of employment that states you have guaranteed hours at a guaranteed rate, we can use your guaranteed hours multiplied by your guaranteed rate, and then you find your monthly income, then multiply it by 12, and that should be able to give you your total yearly income that we can use to qualify on your application. There are a handful of ways to obviously take a look at income. Every lender is different, but those are basically the guidelines that CMHC sets out for qualification, and most lenders fall in line with the CMHC requirements.
Business for self documents, I think, kind of important note right now, especially coming off of COVID and maybe going back into potential phase 2s and some people being in relative lockdown scenarios again. If you're business for self, a bank is going to want to see your past 6-month bank statements. And basically what they're checking to do is to make sure that you're on pace to make the same amount of income that we're qualifying you at. So we'll still use a 2 years history for business for self guys. And like I said, the banks are going to want to take a look at your past 6-month statements to make sure that you're still bringing in income and still on pace to make something similar. Banks are human. Like there are humans working at bank, and they understand that they understand COVID. They understand that people's businesses have been affected. So as long as you can maybe, as long as you're starting to show the strong income coming back, if your business was affected, and we can make a strong case for it, that strengthens your ability to get approved by the bank. But if your business has been completely shut down for the last 6 months and your business for self, it might be tough to be getting approved right now at a bank just with the way that they qualify income and what they're looking for. And something else too, a lot of the banks have asked for an additional T4, and maybe even an updated job letter right up to 15 days out from closing. So, if we start your mortgage application a month or two ahead of time and you upload your job letters and your T4s, just be aware that the banks are asking for additional documentation about 15 days out, just to ensure that those applying for the mortgage are still employed for full time and are still receiving paychecks. So if we come back and ask you guys for, the same documents, we know it's frustrating, but unfortunately, we're just trying to play along with the banks and do everything as quick as possible so that we can make it a smooth transaction.
For sure. James, in regards to your Instagram live question, feel free to reach out to us. We'd be happy to share some information. Not going to get into it over a live stream, but feel free to reach out to us at josh@themortgagebox.ca or 519-729-9212. I can talk to you after the live stream. And we have a few questions in regards to the financing for on YouTube. Anyone go through it?
Yeah, so Mike Cherjenko, I think I probably messed that up, but question was, he has some equity and he is a student who's looking for full-time work. And his question was, if he's salary, based on how many months do I have to work before buying properties for 300 to 400? So if you pick up a job and it's salary, and we have a job letter that states your salary and you're getting paid, we're going to take a look whether or not you're on probation. As long as you're not on probation, we're going to be good to use that guaranteed income to help qualify. So step number one, making sure you're not on probation, and if you're not, then we're going to be good to go ahead and use that income to qualify, even if you're coming fresh out of school. If you are on probation, we would just have to wait until that probation is up, and then we can look at moving forward. Now, if your probation is over by the time you close on a property, we can also have that discussion with the bank as well too. And 98% of the time the bank will allow you to close, provided that you're, they do one last check with your employer beforehand and make sure that you are on probation by the time you close. We'd be able to start the application at least and get the approval and move forward that way.
Gotcha. Rento in Montreal. Do we provide mortgage services in Quebec? We are part of a Dominion Lending Centers franchise, so we have access to every province in Ontario through our access desk. Our access desk is signed up with the majority of lenders across Canada and the nation. So if we did need to work out of province, we could. Now, that being said, we are taking usually only commercial deals out of province at the moment. But if it was something that you're interested in running some ideas off us, we'd be happy to chat.
And keep in mind, with the way that we have to facilitate our out of province deals, we don't work directly with the banks. We have almost an underwriter at our head brokerage who deals with the underwriters at the bank. The process is a little bit slower. Turnaround days are a little bit past a week. Sometimes maybe looking at like 7 to 14 days. So, if it's a time sensitive deal, as much as we love to help some people, we are a little bit more limited with our speed and ability to turn things around out of province, just because there is another third party involved. So like Josh said, we do have some access given that we're in DLC, but it does tend to be a little bit slower sometimes, especially just given COVID. And some other things too, like we're helping a client in the Alberta area right now. And I found that a lot of the rates are very different in that area, especially on the rental sides. Alberta and Manitoba, rental rates are 65-70% right now, loan to value. And I think I just saw a stat the other day that 13 to 18% of all mortgage deferrals came specifically from Alberta. So that's a pretty high number come from just a single province. And that's kind of why we're starting to see lenders be a little bit more tentative in those areas. And they're really picking and choosing which areas of the province that they want to lend in. And the rates are pretty drastically reduced right now. So just keep that in mind as well.
For sure. One of the things, we have a few people on all of our channels currently. So one of the things I wanted to do real quick was, while you're all on here, if you could just please hit the subscribe button. It really helps us kind of grow our following. We're looking to going to push as much content out as possible in the next little while. So if you're on here right now, hit the like button, hit the subscribe button, you share it if you'd like. We're trying to obviously just kind of create a following and to reach as many people as possible. So each and every one of you who are on here right now actually help us do that. So we really appreciate that.
And if we have worked with you guys in the past and you guys appreciate our service, one of the things we're also looking to do is just to catch up with some of you and get a Google review. Just if you guys have some good stuff to say about us and our services, again, if you guys could leave a Google review afterwards, that would be super appreciative also.
For sure. We got Watts coming in with a question. Will banks qualify my total income before RSP contributions, or will they only qualify my income net of contributions? Your bank will qualify you based off of either line 101 or line 150, depending on what you're claiming. So your line 101 is going to have any T4 income, and then we're going to look at your gross T4 income. So how much gross did you make, and then obviously they take taxes after that. But they took a look at your T4 income, and if you're self-employed, obviously your business line income, and if you are taking dividends, it's going to be your T5 income. So it's just a matter of how you kind of give yourself your pay. But if you're trying to write your income down with your RSP contributions, I believe they're going to take a look at your total employment income, and then obviously you're writing it down for RSP purposes.
Yeah.
Liked and already subscribed. Appreciate it, guys. That's great. So we actually have a handful of people who are looking at multifamily residential property at the moment. We just kind of wanted to maybe touch on that a bit. Hot markets that we're looking at right now. I know I saw it in the chat previously. We weren't able to touch on it, but we're seeing a lot of investors take a look at Windsor, Sarnia, Summer and Sault Ste. Marie currently. Sudbury. A lot of guys are trying to find those value-added properties that are kind of lower in value, obviously, than GTA or Kitchener-Waterloo or Guelph or Mississauga, but cheaper in regards to being able to get into a per unit cost. So it's interesting to see those markets are kind of booming, and they have been since, I guess, March. So it's, if you're taking a look at property or you want our opinion on a property, those are the hot areas currently that we're seeing with all of our investors.
Yep, definitely. And just remember, guys, multifamily outside of 4 units, your down payment structure just changed a little bit. So, in most cases, you're looking more towards the 25 to 30% down payment. Moving forward from there, as you mentioned earlier, some of the CMHC stuff, they can go to 85% loan to value on their commercial deals. But again, the application times are a little backed up, looking at like 6 months right now. If you're looking to get a multifamily / larger commercial and the down payment is an issue, and you guys have, either a vendor take back possibility or whether you have some other collateral properties that we could look at tagging. There are private capital firms out there who can get you guys to commercial rates in and around the 7.5%. And, they are able to go up to about 85% loan to purchase. So that is another option as well, too, to be able to just get into the property. And then once you get the updates, get the rents to, market level and get them up to date, look at refinancing out with either CMHC or with just another A lender on the commercial side to get that rate back down. But again, private lenders can be a good solution for the commercial markets as well, too. For sure.
We got another one here from Mike. For first deal, should I work with a broker or with a lender on my first 5 or 10, i.e. Scotiabank deal? So when it comes to working with a bank or with a broker, it's really up to you and the relationship you have with your bank. Obviously, I'm a broker. I would much rather like to work with you, but the bank sometimes can do a little bit more than what the broker channel can. For example, Scotiabank can push more deals than what a broker can do. We're limited to the amount of deals that we can push through with a single bank for a specific person. When it comes to personal debt servicing, we debt service the same way a bank debt services your property. So there won't be any difference there. The only difference would be an exception, which, we work closely with our BDMs to make sure that if there was a situation where we needed one, we could ask for one. I would say, I guess it just depends on how you're structuring your deals and your portfolio and who you want to work with in regards to planning that portfolio out and what are you going to do to take those next steps afterwards. And we actually have another question on our Instagram. It says, on VTBs, how will the seller continue to carry the mortgage affected their next mortgage application? Okay. So a VTB mortgage shows up as a second mortgage on your application. So if you are giving an application to your mortgage broker and you are filling it out correctly, you're obviously going to show that you have a first mortgage with whoever, and you have a second mortgage. That second mortgage obviously is your VTB, but you still have to show the rate in which you're paying the VTB. So it would just, you'd have to personally debt service the loan. Now, if the VTB is part of the subject that we're dealing with, obviously we're going to pay it out prior to advance and or through the proceeds of your next refinance. A subsequent question: what are some of the strategies you guys are employing to attain over 80% loan to value, and is it relatively easy / common? So 100% financing is near and dear to our heart. We help quite a few people with it. So obviously the first way to do it is vendor take back. You have the vendor obviously give you seller financing. You take that financing and you get first mortgage to make the difference of that. So you have 100% financing. Now, that being said, it's very important to realize that there needs to be an exit strategy in place to get out of that. So because of Bill B-20, it basically came out and said that any federally regulated financial institution cannot have secondary financing in place on a purchase. So you can't have an institutional first and a private second mortgage, such as a VTB, meaning you're going to be in a private first mortgage when closing on your transaction, meaning you're probably in a 1-year term, or you're definitely in a 1-year term. So you have to have some sort of exit strategy in place to be able to either force appreciate the asset to refinance in a year's time, or maybe the solution isn't quite right for you. Now, that being said, most people need to understand that once you're at the end of your private first mortgage, if you can't get out of that first mortgage, you have to renew. Obviously, if the lender will let you renew, and there are a bunch of fees involved in renewing that mortgage again. So something to keep in mind, but that's one of the strategies. Want to talk about the second strategy with private capital firms?
Yep, collateral. So if you guys have collateral properties, the mix that we work with, the mortgage investment companies and the independent private guys that we work with, the independent guys, they'll do commercial loans as well too. Sometimes they're syndicated, but they're still able to put the funds out for those properties. The mix and the private guys, they will still consider, residential private residential properties as collateral, or commercial properties, whatever you guys have, any kind of building that has equity in that building. They're able to put a collateral charge on there, and that helps to securitize the loan for the lender, and that helps to allow them to get to 80-85% loan to value on some of these larger commercial deals where you're more typically around the 70 to 75%. So again, having that extra equity in those properties and being able to tag those, whether it's your property or whether you have a joint venture partner that you're working with, that JV partner has some properties as well, you guys are able to use those properties. One thing that's important to note, if you are taking a property for collateral, if there's somebody else on title of that property and they aren't on your deal, they will have to come on the deal with you guys, or we wouldn't be able to use that property as collateral, just because that the other title owner, or the other person on title, I should say, does have the full 100% responsibility as well too. So they would have to come on title to purchase.
Last but not least, there is a third option for 100% financing. It is purchase your property under value and try to get a private lender to give you 80% loan to value, not loan to purchase. If you're buying it significantly under value and a lender is able to do that, you would obviously have a much less of a down payment than you would initially if you're buying it for the actual purchase price. There are a handful of different lenders out there who would be willing to play ball with this. Obviously, it depends on the market, depends on your strength as a borrower, possibly depends on your collateral. So just a handful of different factors that go into trying to figure out if you can attain that type of financing. But there are a ton of different solutions available to us in the private sector. It's just a matter of finding those flexible financing solutions to get people into the property. Mike had another question on YouTube. Is it possible to max out my TFSA and lend it out to a family for real estate investments? So there is something called Olympia Trust. It's a company that will direct your registered and unregistered accounts. And you can basically use them as a mortgage and lend them out to whoever you'd like at the end of the day. So something that we do specifically is to oh, look, somebody wants to join. Jesse, let's join. Let's see what happens. 1 sec. Maybe we have a question here. You can use your RSP zone directed through Olympia Trust to lend your money out. Jesse, what's going on?
Gentlemen, how are you?
Doing well. How are you?
Good. Looking good out there.
I appreciate it, man. Thanks for jumping on. We're trying to just spread some knowledge and help everybody out. What are you saying?
As always, well done.
Yeah. So Jesse is going to be. Jesse and I are actually all three of us are going to be releasing an exciting new product next week. So it's something that we're excited to share with everybody else. We aren't at liberty to really share the details at the moment, but we are going to be rolling out a few little teasers throughout. For all of our flippers out there, this is something that's going to be exciting for all of you. I know that Jesse is excited to be sharing it with you as well. It is going to completely change the flipping landscape in Ontario, and we are excited to be able to offer it to our network. So we're going to be dropping little hints here and there, and then next week Jesse's going to be joining us on our live stream as well to be able to kind of release the full product. We're going to go through a handful of different videos. We're going to go through some walkthroughs, how to use it, what works best, and we're going to be rolling it out on a large scale.
Yeah, we're really looking to reduce entry barriers, I can say, to flippers and some of the burr strategists out there as well too. So that's a little hint for you guys. But yeah, it's going to be we're super excited about it. We were pretty shocked when we first heard how amazing this deal is, but it's I think it's going to make a lot of people excited and get a lot of more people into some flips and maybe some burrs. So it's going to be super exciting.
Without giving too much away, Jesse, you want to say anything?
Yeah, sure. We're super stoked to be working with Finley Group on providing your flipper and burr clients a new product that will help them get in with a little bit less down. Also super excited to share our knowledge and expertise with your group. So very much looking forward to continuing to align ourselves and help your clients.
Perfect. Yeah, we're looking forward to it. Really exciting stuff coming. So you guys will be hearing from us, from a few of our partners throughout the week. They're going to be dropping little hints here and there. But Friday's going to be the day. So if everybody wants to just tune in, make sure you tune in next week as well. We're going to be releasing this product to the market. It's going to be exciting.
Mm-hmm. Yeah, I think
I'll
we are.
let you go. I just wanted to stop in and say hello.
Thanks, Jesse. Appreciate it.
Appreciate it.
Keep up the awesome knowledge.
Thanks,
man.
buddy. Cheers. Perfect.
Yeah, so that's a pretty unique product, actually. It's originated out west, but they've just brought it to Ontario, and we're one of, I think, 4 brokers who really has access to it. So definitely pay attention next week and come stop by next Friday and kind of catch the full release. I think it's going to be something that a lot of people are going to be excited about. And like I said, we're really trying to mitigate the barriers getting into some of these flips and burrs. So, stay tuned and pay attention.
Yeah, guys. So, I mean, that's going to kind of wrap up our live stream for today. But again, we want to thank you guys for tuning in. It is really important. You guys help us a ton by watching our videos and commenting and hitting the like button, subscribing. We're trying to make this something a little bit bigger than what we currently have now. We're trying to obviously share the value with everybody else. So if you guys can, and if you already haven't, please hit the like button, subscribe button, and we will be back next week to give you guys a little bit more information on that product. Looking forward to it.
Awesome.